Strategy of the month, November 2025, our 49th consecutive strategy of the month video, and a fantastic consolidation trading system for the live cattle futures market. Let's start by looking at the system's long-term performance. If we jump into the TradeStation trading platform and look at a strategy performance report for this systematic trading approach to the live cattle futures market, the first thing we'll see here is a beautiful upward sloping equity curve. This shows us the cumulative profits from trading one contract of live cattle futures using this systematic trading approach. We can see that this strategy has had really consistent performance, very few drawdowns over the past 15 years. This strategy has made about $152,000 in profits with a great 2.34 profit factor. If we scroll down slowly to our drawdown statistics, we can see an intraday peak to valley drawdown of about $13,000, trade close to trade close drawdown of about $11,500. Both of those seem pretty reasonable along the way to, again, make about $152,000 over the past 15 years. Here are the symbol settings that we've used for this system, and here are the strategy properties to model the profits for this system. Importantly, these always include the realistic costs of slippage and commissions, as well as look inside bar back testing. Now, this strategy has had very consistent performance, as we saw from that equity curve. This system has had positive returns in 14 of the past 15 full calendar years. It's off to a good start here in 2025 at about $12,000 in 2025. This strategy's returned about $9,300 on average per year, which represents about a 69% return on 2.5 times margin. Now, cattle is a pretty big contract. Each contract of cattle is worth about $97,000, but the good news is that it requires relatively low margin. So margin required by the exchange to trade one contract of cattle futures is only about $3,000. So it offers you good bang for the buck. So if you're a beginner to systematic trading, you have a smaller account, this market and a system like this offers you good bang for the buck. You have a large notional contract with relatively small margin required to trade. And if we bring up a chart, a cattle 1440-minute bar chart, so effectively daily bars on the cattle market, we can really get a sense for how this system trades. This system is a consolidation system. So it is looking for prices to consolidate into a smaller trading range, and then it is buying if prices are relatively low in that range, or selling short if prices are relatively high in that range. And we can see that this system has done a pretty good job recently of catching some positive profit moves. These teal lines are positive profit trades. So for example, 1, 2, 3, 4, this system just closed out yesterday its fourth consecutive positive profit trades. There's a lot of these teal lines recently, which confirms the fact that this system is hitting new equity curve highs today. So this system has been in tune with the market recently, and we know via long-term performance, this system has been in tune with the cattle market for the past 15 full calendar years. Now let's jump into the fun stuff and look at the full system code logic that drives this systematic trading approach. So here is the full system logic written in the EasyLanguage coding language. We can see that there are a few moving pieces here. There are a few filters before the buying entry as well as the selling short entry. There are a few different kinds of exits, but as always, we can use an LLM like Claude or ChatGPT, and we can simply say, explain this trading system to me in simple terms. So let's see what Claude comes up with here. This is a range breakout strategy, so a consolidation strategy with inverse momentum filters that enters longs when price breaks above recent lows and enters shorts when price breaks below recent highs. It also has a few RSI, CCI, ADX filters, as well as exits with a 3% profit target and a 6-period moving average plus minus 2 times ATR exit as well. So effectively, it is a filtered consolidation trading strategy. And if we look at our code again, we can get a sense for what that looks like. Here are the filters. Here's the consolidation signal to get long. Here are more filters. In this case, they're commented out. I'll talk about that in a second. And here is our entry to sell short with those different exits. So overall, once we use Claude or chat to explain it to us, we can see pretty simply how this strategy works. Now, some of these filters are commented out. I put these double lines in front of the filters ahead of the sell short entry. The reason I did that is because when you include those filters, you have fewer trades. Those trades end up being more profitable, especially over the past few years, but a little bit to the detriment of the trades that we saw between 5 and 10 years back. So as with any other filters, you can easily turn them on or off by simply commenting them out. Even if we comment out those filters on the sell short side like we've done here, this is still a fantastic and consistent trading strategy for the live cattle futures market. So that is it. That is our strategy of the month for November 2025. A fantastic consolidation trading system for the live cattle futures market that has had positive returns in 14 of the past 15 full calendar years. Let me know in the comments below, what do you think about this system? Does this system feel over optimized? Do you have a better approach to trading the live cattle futures markets? Let me know in the comments below. Don't forget to hit the like and subscribe button below so you don't miss out on any strategy of the month videos from Peak Trading Research going forward. Good luck trading live cattle futures, and we'll see you soon.